international request recording. Here we go, guys. We're live, and I'm super excited about this one. We've been doing sharpshooter showcases, and guys, honestly, there's some levels to this shit. You got the retail noob on baby pips. You got the sniper after the sniper course. Then you got the sharpshooters, the people you're seeing now, and then you got Mike. And so these guys are really one level. Well, as an educator, not just Mike, I shouldn't classify that as that, right? These guys are getting close and close and closer to the levels of being able to not only just manage a quality amount of funds, but being able to impact the masses through through actually educating and through actually breaking down how these markets work, making it simple for people. And I think it's really crazy just what we've been able to do over the past week with these calls. And I don't think there's any better way than to end it tonight, this Friday night, with this speaker right here. And this is someone that is the OG. This is someone that I consider a little brother, as if we were the same blood. This is someone who's traveled the world with us. This is someone who's been through the trenches with us. This is someone who's been through the highs and lows. This is someone that has seen a lot of the stuff behind closed doors that most people don't get to see that we go through. And, I'm really, really, really excited about this because over the past year, this is someone who has been quiet, but has been extremely proactive, has been learning, preparing, and putting himself in a position for moments like this to just share an insane amount of value. This is someone that has traveled around the world with some of the top chairmen in the company and has also impacted more than 300 people in his organization. And so he is quiet, but his impact is massive and extremely loud. And so with that being said, y'all already know who it is, but Kevin, I'm stepping out of the way of your savagery and I'm letting you take over, my man. You're the co-host.
Let's go. What is up, familia? What's good? First of all, I just want to say I'm so grateful to be here, guys. I'm so happy to see all these beautiful faces, beautiful souls. Show me some love. Excuse me. Sheesh. Show me some love in the chats, guys. Can you please type in where you're coming from and where you're tuning in from? I gotta get this on IG. We got Chicago in the house, Dallas in the house, Detroit, LA, Houston, Plainfield, Connecticut, Tennessee. Okay, we going off tonight. Let's go. All right, I gotta just say that real quick. But yo, guys, thank you so much for hopping on. I'm honored to be a part of this movement, to be a part of QC, and to really provide you guys, an immense amount of value. Pretty much show you, everything that I've experienced through these charts. Everything that, by the way, everything that I know, right? Everything I'm gonna teach you guys. I didn't come up with this, guys. I'm just a student, as always. I'm just coachable, and I listen to what my mentors always told me, right? I plugged into Go Lives, I plugged into the course, and I just always have remained and kept a high teachability index, which always allows me to continue to expand my knowledge and my experience and wisdom within this market. So I kind of wanted to just start off with a little bit of mindset today, especially for these the newbies. I used to be a newbie as well, so just know that I was in your shoes at one point, and just consistency, right? Dedication and persistence is always going to take you where it is that you want to go, right? So I just want to begin with this, guys. Understand this, right? Understand that the financial markets are built around human psychology, right? There's always someone reacting through a buying and selling, right? From an individual who's trading from himself to central banks, governments, corporations, hedge funds, right? However, the markets are based off of greed and fear, right? In order to be in sync with the markets, right? In order to be in sync with the markets, you have to see it from this point of view, right? And rise above it, all right? And if you want to be the best that you can be, having the skill sets is not the only thing that you're going to need, right? It's not enough, right? What you need to have is you need to develop and maintain a clear, right, calm and collective mind, right? And because this is why it's so important, right? Because each mental act, right? Each mental act is a reality that you're responsible for, right? So with these skills that I'm about to show you guys, on top of an evolving mind, you're going to be an unstoppable trader. So what I'm going to be starting off with today is I want to really begin with, a couple questions that you should be asking yourself, right? So, like why do you think that what do you think that this can do for you, right? What do you think trading can do for you? I want you to just think about that for a little bit, right? A lot of people come in here because they just want to come in, make money, and become a millionaire overnight. But you have to realize that that's okay too, right? Money is okay. If that's your motivating factor, that's fine. But you have to understand and realize that you need to really hone in on why you're doing this, right? Why did you decide to do this, right? Whether it can be, you didn't want to work a job anymore, right? You're tired of, the curated shit that society is giving you, right? Telling you that you need to work until you die, right? You're sick of, just living an ordinary life, and you want to live a life beyond, your imagination, right? Because in reality, there is no limits, right? The only limits that you have are the limits that you set on yourself, right? But understand, this is going to be the driving factor of why you continue to trade and why you continue to do this, because trading, it's not the easiest thing in the world. I'm going to be honest, right? It's not easy, right? So one thing I want to also start off with is, trading, you don't need to be trading all day long, right? The reason we do this is to create that time freedom, right? So you don't have to be on the charts 24/7. I know people who are literally watching candles print every single minute, and I've done it myself too personally, but that's not the way that, that fits my personality, my style of trading. So kind of understand that why you're doing this. We're doing this for the free time. I mean, although I love trading, and I truly believe it's a beautiful art form and something that once you master it, that you really do master yourself as well. Like I was saying, this market is built around human psychology. So once you understand that and you go beyond that, you start understanding not only yourself, right? Because understanding others is powerful, but understanding yourself is super powerful, because once you understand yourself, you understand how everyone else is thinking and feeling, and that's going to allow you to, understand fear and greed of the market, right? So, another thing is that trading is like the great, right? Rest in peace, Nipsey Hussle. He always preached that, it's not a sprint, it's a marathon, right? You want to be in this for the long run, guys. You want to be in this game for the long haul. So, you need to be patient with this, right? You need to have the patience with trading. If you're not a patient person, then, the market's really going to test you, and it's really going to humble you, right? The market is a beast. The market is an algorithm. It doesn't care about your feelings. It's not going to be like, oh, I'm sorry, I hit your stop loss. Like, let me give your money back. Like, it doesn't care. So just be prepared for the market to humble you. And then lastly, I want to touch on a couple other things, really, that this is like the best video game I've ever found, honestly. Like, I wish I would have found this a long time ago, years ago, because honestly, all the time I invested into anything else that I'd done, playing COD and Call of Duty, and I would have invested that into this, like, sheesh, it would have been insane. And I love comparing trading to video games, because it is kind of essentially like that. You need to have that kind of state of mind, that frame of mind when you're trading, because I feel like a lot of people are afraid of the market because they get their stop loss smacked, and then they don't want to continue trading because they're afraid of the market. But instead of having that mindset, have another different outlook on it, right? Think about it like if you're playing a video game and you have unlimited lives, right? All you know is that every time you die, there's a tunnel right there. There was a person right there that killed you, and now the next time that person's gonna be there, you have to jump over that turtle, right? So now, that every single time you fail, you're just gonna keep moving forward and forward and forward until you end up, saving the princess and saving the world. So at the end of the day, continue to fail forward. And one thing that also that you should establish and figure out. Let me share my screen. Cool, cool, cool. Can you guys see my screen? Awesome. So you really need to establish like the type of trader that you're going to be. There's, you know, 4 types of traders. We have, you know, position size traders. These are people who are literally hodling forever, right? These are the traders who they are just holding for the rest of their lives. And then they have swing traders. Swing traders are, you know, that's my type of style. I love trading for holding on for days and even weeks as well. You know, that for me works the best, especially if you have a 9 to 5, right? Because if you're trading and you have a 9 to 5, you know, it's not necessarily going to be the easiest thing for you, but swing trading definitely helps you if you do have a job, because then you can, you know, let your trade ride out, let it do its thing, and you can, you know, be making money while you're at your job, right? And the second kind of trader that you can be, or I mean, the third kind of trader is an intraday trader, right? This type of trader, they hold trades for, you know, for hours, even until the end of the day, right? And, you know, I kind of fall in between a swing trader and an intraday trader sometimes, you know, depending on what the move does. So, and lastly, the fourth and final kind of trader that you can be is a scalper, right? Scalpers, they normally don't hold a trade longer than 15-30 minutes. They're in and out. It's a little more risky, but I personally don't recommend scalping for many people unless you're trading USD. And you know, you really need a plan, right? Because if you don't plan, right, if you fail to plan, you plan to fail, guys. You always need to have a plan when you're trading, and that goes with everything that you do in life. That works with any single thing that you do, not even just trading. So, you know, right now I'm kind of mainly talking to the beginners right now, and I'm gonna get to more advanced stuff, but I know there's a lot of different skill sets in this call right now. So, you know, what you want to do when you're first starting off, you want to, you know, really hone in on a couple pairs, right? You want to at least be trading like 2 Forex pairs, maybe 1 commodity, and maybe even, you know, 1 indice as well, right? So have a few pairs. You don't want to be hopping all over the charts. You want to kind of just identify the personality of these certain pairs, get familiar with it, understand how it moves. Because it's like, you know, a relationship. You need to understand how that pair moves, right? How this person acts, right? How they you know, the personality, right? And the more attention you give to that one individual, the more love they're gonna give you back, right? So get familiar with certain pairs, right? Don't go crazy in the beginning. And then you want to also identify what times you want to be trading, right? So if you're in the West Coast or you're in Europe, you know, what's going to be most favorable for you is definitely going to be London session, right? That's going to be helpful for you guys a lot. And then people on the East Coast, y'all definitely, you know, hone in on New York. And then the London and New York overlap is so key. So from 7 to 11 a.m. is my favorite time to trade, right? I'm actually on the East Coast right now, and I love trading that, especially if you're hopping on bounce bag. You guys know the vibes. And then, you know, a couple other things is like pick a weekly percentage goal that you want to do, right? I'm sure most of you guys have seen, you know, the compound sheet, right? Doing 5 to 10% a week. Y'all see the numbers do, right? After a while, like, they get pretty crazy, especially if you have another income stream coming in and you're, you know, stacking on top of that every week. And, you know, what I like to tell people is, you know, yeah, it's cool. Like, you could potentially make a lot of money in like a year or 2, but like, I don't want you to focus on how long it's going to take you. You know, I don't want you to be too focused on the date. Like, oh, 1 year from now, like, I'm going to be a 6-figure trader. Don't really focus on that. You got to think about the infinite game, right? You want to be only outdoing yourself every single day, right? Because I know that sometimes people can be discouraged if they don't hit their weekly goal, if they don't hit their monthly goal, their yearly goal, right? It's okay, guys. Because understand that that's just time. Understand that you grew, right? You became better, right? You're now better than you were like the week before, right? It doesn't matter if you didn't accomplish that time, but as long as you keep growing, right, every single day, eventually, you know, it's inevitable that you're going to achieve that. It just doesn't matter when. And then the last thing is, you know, how many trades you should be taking a week. You know, I personally don't take many trades. I'm very selective, especially since I'm a swing trader. You know, I don't take more than literally 1 to 4, 1 to 5 trades a week. to me, that's what I personally do. That's something that I personally recommend. And then so like, yeah, I'm gonna get down to the charts now, pretty much show you exactly, you know, the way that I trade. You know, I don't trade too differently than anyone else that you heard. And shout out to all the other sharpshooters that hopped on Zooms this week. Y'all killed it, and you guys are so, you know, blessed to have all these amazing mentorships. So for me, you know, for me, I like to start with structure. So what I'm gonna do is show you guys exactly why this is so important. So the market moves like this, right? We move in series of waves, right? We got highs, lows, and highs, right? And then as above, so below. So we got lows, highs, lows, lower high, and lower low, right? Cool. So imagine that each one of these waves, right, this is the weekly time frame, right? So imagine each of these waves is a weekly time frame, right? So, you know, well, I'm gonna get into that right now. Actually, let me explain this before anything else. All right, so why structure is so important? Because it's always moving either in a bullish, right, uptrend, or a bearish downtrend, right? So in order to identify structure and where you're at, you know, you could have these bullish momentum. You can also have, you know, time where you do break this low and now we're shifting into another direction to the downside, right? And now you can be looking for shorts, right? So structure to me is so important, because really like 80% of the battle is structure. Because if you can understand structure alone, especially as a beginner, you know, and you use proper risk management, yo, you can still be a profitable trader, right? The rest of the concepts I'm teaching you is really just, you know, I like to say the cherry on top, right? So if you can identify where you're at, right? If you're in an uptrend, right? Where you're at in this uptrend, right? I really hone in on these points. You know, this can definitely help you understand where you're at currently in the market and what direction you're going to be going into, right? So the market it moves in fractals, right? So imagine each one of these waves is on the weekly time frame, right? So within these moves, right, within this one wave on the hourly, you're gonna start seeing move, you know, series of highs and lows, right? Until, you know, you might seem like it's a downtrend, right? But what this is essentially, in the hourly, you're gonna get a break of structure, and then you're gonna get a temporary downtrend, right? Until you get, you know, signs that we're breaking above again and continuing this momentum up. Okay. So this market is all fractal, guys. If you don't know what fractal means, it just means that the same patterns you're gonna see on these large time frames is gonna be the same patterns you see in the small time. So I'll actually show you an example here. So like, this is an example of what fractal looks like. It's the same patterns, but going internally forever, you're gonna continue seeing the same pattern over and over again, even if you continue zooming in, right, forever and ever and ever. And you can see this in nature as well, right? The patterns of the lead, right? See how it just continues to expand out in the same pattern. Even a snowflake, right? Just every time it expands, it makes the same pattern. Lightning bolts, whatever the hell this is. Even a tree, you know, each branch has its own branch, and these branches create their own branches. And, you know, life is very fractally. And the same concept you see in the market as well. And it's very, honestly, very fascinating. And once you identify this, right, gonna be able to understand where we're currently at with structure. And what's beautiful about this, right, is that, you know, when you get these breaker structures, right, on the hourly, you're gonna see an interesting pattern, right? You're gonna see an interesting pattern here and in here to get that reversal, right? And this is something that, you know, has been, that completely revolutionized the way that I see the market, the way that I actually understand the market. And it's called Wyckoff logic, right? So this completely, you know, shattered my paradigm of what I knew about the market. And I could really say that understanding this, how this concept alone, right, like changed the game for me forever. So like, shout out to Wyckoff. He's truly the GOAT. I wouldn't be the trader I am without him. So I always want to show love where it's due. So, you know, the way to understand this is, you know, retail, they're taught to trade certain patterns, right? Because you have to understand that the market is controlled and manipulated. The whole world is controlled and manipulated, right? It's controlled by central banks, federal banks, you know, the people on top, right, that have all the money in the world. So like, if everything's controlled, I mean, information is controlled, right? And he who controls information controls the whole world, right? So if they control the information and they're giving out free Forex trading information, they're telling you to trade certain patterns, right? 96% of retail traders lose in the market, right? Because they're learning these patterns. They're all trading the same way, right? So if you want to become a part of the 4%, right? Like how the banks, right? These large institutions, corporations, hedge funds, how they're trading, you have to, like I was saying earlier, you have to understand that the market is based off fear and greed, and you have to, you know, think beyond that, right? So that's how you become in sync, right, with these markets. So retail, right, is taught to be trading these, you know, MW patterns, right? We got an M pattern right here, right? So what this does, right, when you see these patterns, right, these equal highs, equal lows, what this does is it's enticing buyers and enticing sellers, right? So what that does is it creates a pool of money, right? It creates a pocket of money, right? So visualize that there's just a pool of money right here and right here, because you have to realize that most people, you know, they're taught that they need to have like a 30 pip stop loss, right? They have their buy limits, their, you know, they have their buy stops, they have their sell limits, sell stops, all their stop losses are in here, right? So what happens is, you know, imagine that none of this over here exists, right? That we're just right here. The whole world, everybody and their mom is like, yo, buy this, buy this, buy this, right? Everyone's got their stop loss, everyone's hyped. They get that move up. They're like, yo, let's go, we're in profits. And then what happens next? The banks, they had to sell it down, right? To grab all this money to then buy it up, right? So what happens next is this last down candle that came to capture liquidity and clapped everyone's stop losses, right? This right here is going to be your institutional candle, right? So let me do this for you guys actually before I continue, right? So I'm going to give you guys the sauce. I'm going to give you guys literally everything that I know that's helped me. So this right here, this is the formula. This is the secret Krabby Patty formula. You know, the 5 components of a trade setup, whatever you want to call it. Just know that these 5 steps is everything that you need to know, right? So let's just name it the formula, right? So first things first, like I was explaining and breaking down to you, you want to know and identify structure, right? Second thing you want to know is your institutional candle, right? Also known as your point of interest. Third thing is imbalances. Fourth thing is liquidity. And targets. Fifth thing is fibs. And the sixth thing is time. Beautiful. Oh, wait. Awesome. Yeah, so first thing we were just going over structure, and now I'm gonna start getting into really intertwining both of these right now together, along with pretty much just these first four, and then I'll show it and explain it on the chart as well. So it's important to know where you're at, right? So this right here, you know, it's considered a W for retail. So like I was explaining, right, the banks, they came and clapped everyone out here, right? So now this candle is something that you want to keep your eyes on. And then what happens next is price actually comes up and it tests this candle, right? It tests the open of it, or 50% of that candle. And then what happens is, you know, it comes back to that level, right? Pretty much spitting in retail's face, right? Being like the last laugh, and then it makes them move up. And once it breaks, you know, previous lower high, now we're shifted in momentum. We're shifted in structure. So we're now going to be looking for buys, right? So essentially right here, you're going to see a lot of bullish momentum, a lot of buy side orders only. And that usually leads an imbalance here, right? A gap, right? And then this candle as well. So what you want to do is you want to wait, right? This is where you want to take your Fibonacci. I'll get into that also later on, and wait for price to come back, right? So these candles, right, are like magnets, right? Because the market moves in algorithm. So you have to keep in mind that the banks, they're dumping $1 million, right? $100 million. They're selling it down, right? And then they're buying with $500 million, right? So this order is still open. This order down here is still open, and they need to come back to this candle to break even out of it. And that right there is called mitigation. So they have to mitigate out of that order to keep pushing up and, you know, make millions and billions, trillions of dollars, right? So then, you know, as below, so above, right? So you have the markup. This is where you could stack your orders up until, you know, you look for your targets, right? And then once price gets to, you know, a buying climax, you know, it gets overbought, it starts, you know, consolidating like this. Same thing, right? As below, so above. As above, so below. Pocket of money. Noobs get stopped, right? Test of that candle. Regular structure, retest, and rinse and repeat. Comes back to this candle. Come back to full liquidity. Once you understand that this is how the market really moves and like what's really going on, you're gonna, you know, it's gonna open your eyes and it's gonna make a lot more sense. So now I'm gonna pretty much show you on the actual chart. You know, I'm gonna just do on the daily for now. Understand that you could see that we're in a bearish momentum, right? No, I just want to keep it simple. You know, you want to always keep trading as simple as possible, right? You don't want to overthink anything. You don't want to think too hard, right? Trading is very simple. You can see we have a lot of lows and a lot of lower highs, right? Right, we're trending bearish, so beautiful. I'm gonna check the chat box. Yes, sir. Everything is fractal. Shout out to boy Matt Ramirez. For real, for real. Gave me mad breakthroughs. Shout out to literally everyone in Trade House. You know, without them, I wouldn't be here, bro. I would not be educating. I'm just a product of the product. By the way, for those of you who don't know who Richard Wyckoff is, he's the person who JP Morgan, majority of his fortune, PS JP Morgan Chase. True. Yes, sir. Yes, sir. All right, let's keep it going. So, yeah, we're trending downwards. And, you know, this right here, definitely feel like it's getting a lot of people's attention. Oh, wait. My bad. Hold up. This wick, you know, don't be fooled by this. This isn't true structure, right? This, right, is not true structure. It's really just a shadow, right, in the market. The shadow of the candle. You know, turn off the wicks. Boom. Right? You can see that the bodies is the true volume of the candle. So once you turn the wicks off, you can clearly see that this was a true low, and you're not going to be phased by that large wick. So we can see that we're trending downwards. Cool. We identified structure, and let's watch this play out for a little bit. I'm gonna bring it back a little bit. So you can see that, like how I was explaining, right? The market, it will move in short-term uptrend, right? To retrace back to our point of interest candle. So here, what immediately grabs my attention is this last candle that was this last buy to sell candle that captured liquidity right here. And this one just screams at me because this is like the hard push up where the banks they bought to sell it down, and then you saw it price just never made its way back up. So we definitely have imbalances here in the weekly, and now it's a good indication that there's still a lot of money up here that needs to come back to, right, like a magnet, to come get those orders out, right, come grab those orders. So how I play this candle is I play off the body, and I'll play off 50% of this candle. Beautiful. All right, dope. So then if you move over the weekly, you'll see that there's a lot of imbalance right here. All of this pretty much is an imbalance. So now that we've identified the first 3 steps, now what I look for next is liquidity and my target. So we already identified liquidity that got captured up here. So now what I want to see next is liquidity where my target can potentially be at. So I see these equal lows down here. Tons of money right there. Awesome. So now, this is where patience really comes in, right? Like I was saying earlier, you need to be patient in this game, right? Because what trading really is just literally like 80% waiting, and then 10% buying, 10% selling. So at this point, I don't really want to be looking for buys. You could be looking for buys, on the hourly and smaller time frames, up until here. But what I'm more interested in seeing is, since we're bearish, and until until this remains intact, I want to see shorts. That's what's most favorable to me. So for more advanced traders, yeah, you can like buy this up, right? You'll see that there will be accumulation down here. But since we're bearish, I am most favorable with this up, right? Until the market tells me something else. So let's watch this play out. Oh wait, hold on, we got one last step. Then we got the flip. Smack it out. Alright, you can do body to body, or you can do the wick to wick. I personally like the bodies because to me that's true volume, and you can see that discount price is anything from 50% to the 886. I personally don't take any trades unless they're in my kill zone, which is between the 7-1 and the 886. Right, let's go. Let's do this. So since my this IC candle is in alignment and in sync with this Fibonacci level, 7, 8, and the 886. Oh, not there. I want to just play in this area in here. So dope. Beautiful. Y'all see that? That played out so perfectly. I can't even make this up, guys. Like, and TP obliterated. That was like 340 pip move. This is a trade that you can be just holding on to forever, especially since we're bearish, right? And Australia is going through it right now. Corona, they got wildfires too or something. So their economy is just taking a hit. So since you understand that we're in a bearish market, you get to your point of interest. You get all of these, right? Let's see what time it was. So this is kind of a random time during the Asian session, but still once they got to your kill zone, you could be looking for the shorts in there. So I'm gonna show you another example of what I'm talking about. Something that I actually took. Actually, I didn't take it this week. I actually missed it. GJ, where you at? I don't got it. Shout out to my guy Carlos too. We were backtesting and he had brought this to my attention. Beautiful setup. All right, cool. So let's bring it back a little bit. So as you can see, right, we're trending upwards. We're in an uptrend right now. And really that's all I want to see for right now, right? I want to think too much. I want to think too hard. I'm seeing it. I'm using what the market is giving me, right? The information I currently have. So right now, what I want to do in this area, because I can see that it's starting to consolidate, accumulate. You want to keep going in the smaller time frames and really zoom in on this and examine it, right? So here you can see that, right, this may seem like we're bearish, but keep in mind that that's just a pullback, right? On the hour, That's just a pullback. See, this is another example of fractality. So since we were short-term bearish on that pullback, you can see that we had broke above structure, above this previous lower high, right? Lower high, low, right? Broke above that. We actually maintained that right here, right? So if you didn't catch this move, that's perfectly okay. You know, your risk reward is gonna be a lot better anyways. If you didn't catch this move. Well, even though that's amazing risk reward, like you could literally use a like 11, 12, 15 pip stop. That's perfectly fine, you know, because check this out. So like I said, you want to take trades, and I don't take trades unless I'm in this kill zone. So let's examine this area. So if you move down to the 1 minute, you see that we have beautiful accumulation, right? And what really grabs my attention, you know, we had equal lows right here, right? This is the last bearish movement up. Excuse me. This is the last down candle. We also have a lot of liquidity right here. We broke above these highs. We got imbalances in here. You can take your Fibonacci, so from low to high. Alright, so what I would do is fine tune it to the kill zone. And now let's watch it out. Boom, alright, we're in a kill zone. So what I would do, how I would take this trade is, right, these small time frames are amazing, right, for risk reward. So you could literally have a 9 pip stop underneath that low. Even if you had it on the 886, you played the 886, it would have been nasty. Literally 6.6. Right, immediately target this high, and since we're bullish right now on GJ, immediately I want to be targeting this high. This high, and then you can even go to the daily and find, you know, other targets to the upside, because right now, you know, we are, you know, had a big move down, but price is currently showing me that it wants to move up, right? And we have certain POIs, points of interest candles, that catch my attention. You can see that we already came up to this right here, and it dropped. So to me, this candle is still in play. If you play off the 50%, so to me, this can be another target. We also have a gap in here, and we also have this candle that catches my attention as well. The last bullish candle down by the sell candle. So if we move back to the, go back to the hour, you can even take it to here, to that other target. And you can see now we're literally, so that's 150 pips with 6.6 stop loss. Your risk reward is now a 1 to 23. Right? So like this is how you could take advantage of small time frames to really refine your entries and get these insane stop losses, super small stop losses, stupid risk reward. And you know, this is how you're able to over leverage your account without actually over leveraging it, right? With using proper risk management. Right. So let's see what happens. Whoa. Okay. TP1. Got obliterated. And then wait, hold up. This is my first take profit. My fault. Because that was a high. And then this is my TP2, right? So the first one got hit. That was a 1 to 18 trade. And this is a 1 to 23. So yeah, that is crazy. That is insane. And you know, check the chat box. Can you view it from minute to day? I'm not sure what you mean by that. But yeah, I mean, if anybody has any questions, feel free to let me know. This is also another trade I took this week. Actually, Ivana took it. I didn't even take it. But I was playing off of this candle. I believe it's a 30-minute candle on GPUSD. Yeah, this pretty much is my point of interest candle. My point of interest, where I was interested in looking for to enter a buy once it got to this point. You could have entered off this last down candle on a 30-minute. You could use the hourly. Really up to you, right? Whatever you want your risk reward to be like, right? This could have been a 30 pip stop off 50% of this hourly candle. Also in alignment with Fibonacci as well. 886. Clearly see we got equal highs up here as well. So we got money, liquidity. So that was my target. Well, my first target was this last up candle down. And then this is my second target. I wasn't really interested in this for sales really, but just somewhere that we could see price potentially bounce off of. But yeah, this was a pretty crazy risk reward as well. It was 1 of 10. And depending on if you played this on small time frames in here, probably could have reduced it to even higher risk reward as well. And you can see that went for 300 pips. So, you know, knowing these skill sets is very important. On top of, you know, having that evolving mindset, both of those two, that's a deadly combination. And, you know, that's what's going to help you, you know, develop and see more consistency in your trading. And really just, you know, being patient with yourself, right? Because you're not going to learn this overnight. This is taking me like, you know, I like to say 1 year. I've been trading for 2 years now, but all learning everything like these smart money concepts, learning proper risk reward, risk management, really for like almost a year now. And honestly, within that year span that I had these, you know, paradigm shifts with these concepts, it, you know, allowed me to start seeing results, seeing progression in my trading, and it excites me, and it makes me so happy to see that everyone who's getting started now is, you don't have to go through what I went through. You don't have to learn these basic retail patterns. You go straight to the sauce. And to me, that's amazing. To me, that excites me, and it's like I'm just mind blown that this is actually like a thing. Like this movement is actually growing every single day, and you know, people are really coming in here and learning a lifelong skill set that's going to continue to pay them and continue to create that generational wealth, right? And to me, yeah, like that's so beautiful, and I love seeing that. I love being able to be a you know, a part of this movement as well, and helping people, you know, see the world in a different light, and I see a different possibility, right? Because a lot of people, right, they I feel like I'm like a Morpheus from the Matrix. If you guys haven't seen him, like if you want to accept and take the red pill, I'm gonna show you a whole another world that exists that, you know, I've always been looking for, and it really found me, right? And if you don't and take the blue pill, that you continue living, you know, the life that society has given you. So I just want to give it to all you guys for, you know, hopping on this call. You know, thank you guys. You know, I hope you guys had breakthroughs. If you guys do have any questions, let me know right now. You can unmute your mics, or if you don't have any questions or you have questions later on, this is my Instagram. Follow your boy. Show some love. And I appreciate y'all. I really, really do. I'm grateful for y'all.